Very good morning, friends. Welcome to my channel, Billidawn Investopedia. Today we are covering the topic to the market scenario, current market scenario, and what will be going ahead in the coming days and coming weeks and months. So, for this Sunday series, Gyanday, we are having with the current market scenario as a topic. Again, so everyone is concerned about the market, same like as what I am having a concern. As we all pursue more than what we observe actually. In market, one thing is very important, and that is whatever news that is coming, it always discounts first, and we actually react it afterwards. So any positive or negative sentiment that is building in the market, basically when we are actually reacting, that is the time which is very far after what the market has been discounted it. And while real situation arises, we react which is already discounted. So what is the current scenario telling? Current scenario is just telling to wait and watch the situation on international level as well as domestic level. If we understand the macro and microeconomics at both the levels, then there are certain negative sentiments that is right now affecting the market, which is inflation. Inflation is coming up due to the commodities price rise and all other crude and other metals price rise. Interest rate hike, because inflation has rise, interest rate will also rise because need to match out that thing. Third is the war like situation between Ukraine and Russia, and including the Europe side also, which has been pouring in the war, helping Ukraine, and that is affecting the market. Even Europe is badly been affected by the negative sentiments of inflation because of the gas that is being supplied by the Russia, and gas price has tripled down its level, triple up its level than what it has been since war. And one more actually sentiment is commodity price hike, like that is in food, metal, and other commodities also. Due to that, FI is also pouring out the money from the market, because certain uncertainty they are filling the market, and when there is a rate hike, always money goes to the safer side, that is the higher risk of interest return they are getting rather than the risk reward ratio. So that reason also is that FI is pouring out money from the market, that is the negative side and sentiment. And other thing, last but not least, COVID situation has again arisen, which is right now in the China, and China is facing that with a lot of cities they are locking down, and even that is being spreading other parts of the world also. Recently we can say that in India also the cases has started to rise again, so we need to check out that thing also. These are the negative sentiments at the micro level economics, and that is affecting actually the macroeconomics of the world and in the domestic level also. Now again I tell you, whatever negative side that has been discounted, that actually we knows right now. So what will be the situation right now? So positive sentiments are also there, so it's nothing like that all the things are negative and market will go down and down. Whatever negative is there, that has been discounted already. The positive sides, if I tell you, so first thing, all negatives has been discounted, that is the positive, most important positive side. Okay, news they have factored in whatever is there. And again, FII and FPI are actually awaiting, fund managers are awaiting from the Fed side that how much interest rate they will hike, because Fed is playing the pivot role actually in the world economy and interest rates. If US is down, that is affecting other parts of the world, because currency is related with the dollar in international market. So that is also an important aspect, that how much Fed will go far to tap the inflation and how much interest rate hike will be there. First thing. One more thing is there, that is actually economies has been rebounded in certain part of the world after the COVID situation, and data which are coming from that, if manufacturing index, if services index, we are looking after that, so it has bounced back very sharply after the COVID levels. So that is also a positive part. Even the revenues of the government, if I tell you about the Indian government also, the revenues has been increased. If I tell you the April data were saying that GST collection was highest 1.68 lakh crore rupees. So that itself shows that economy is rebounding. So that is also in positive side. We need to take care. If I tell you about the tourism industry, let's take an example. Tourism industry has rebounded very sharply. Many people of you have taken journey, and they might went to many part of the domestic as well as international level tours. So again, there are lot many sectors that has been rebounded, and they are rebounding after the COVID level. That is the positive side. Demand is also picked up in certain sectors. But certain sectors there are demand which is sluggish also right now. But eventually, slowly and steadily, demand is growing up. That is also been taken care. Property also, tours also, tourism sector also. Other thing is that inflation will be cooled down coming ahead, because the base effect, that was the inflation that will help them to cool it down. And the last but not least, there is much liquidity compared to other recession time in the market right now. So that is not a problem, the liquidity right now. Market is liquidity driven, as and well market is liquidity driven. There will not be any problem in the equity market, I see further. Yeah, one thing we need to always take care, that inflation and growth both are interrelated. If there is no inflation, there will not be any growth. So we need to keep in mind the inflation also, and that inflation will only help to take and growth in the coming years and months. Okay. Now, if I tell you about the domestic level, so domestic level there is also an interest rate hike, unemployment problem, crude factor, that is also most important factor in the Indian market actually. Demand in the commodity is also a concern, because there are certain commodities in the market that is having a sluggish growth rate and demand, and that is affecting the business also. Now, positive side is of it, if I tell you about the domestic market, inflation will cool down. This inflation will not be the same as every month on month it will come. The base effect will eventually help them to cool down in the coming 1 or 2 years. Individual savings and investments are also robust compared to other parts of the world. So if I tell you the sentiments of Indian people, they are having very more savings and investments compared to any other parts of the world. So that will also help to rebound the economy. Government spending is also very healthier, if I tell you. So government is spending much on infrastructure. There are many projects which are helping actually to build employment and to generate employment and help people to just circulate the money and help in the economy also. So government spending in the form of infrastructure, in the form of defense, make in India, there are certain other policies also which are helping them to just rebound the economy. That is also a positive side of the Indian market. So if I tell you overall, Indian economy is in a very robust situation right now compared to that of the COVID level and compared to that of the other parts of the world. So it's the right time, I can just assure you, to invest if you are going ahead with a 3 or 4 years horizon, and you will see and good return against the investment rather than your fixed deposit or recurring or any other instruments. Again, we are having and price to earning ratio of 20 p or lesser than that, between 19.5 to 20 p, which is also a very attractive p ratio for investment compared to the previous one, which was around about 25, 26 to 28 p. And going ahead, if I tell you the uh, companies that will make in profit actually, and that will be in growth, this p will eventually come down, so there will be a more investment opportunities in coming days and weeks or a month going ahead. So you are in the right position in the right time to invest in the equity market right now. So now if I tell you about the microeconomic situation, it's not good that much, as inflation has hit hard to the individuals in the form of price rise in crude, price rise in commodities, price rise in food, price rise in tourism. There are a lot many sectors that have seen a robust price rise, so that has hit hard to the individual in the microeconomics data. Due to that, inflation, retail inflation is also picked up high. Labor market is also not that much not performing well, if I tell you, compared to the previous pre-COVID levels, and because of this unusual demand and commodity hike also. So we need to take care about the individual level that these economical data to the individual is not that much good in the current situation. But yeah, we are actually rebounding and we are coming out of that. So always an optimistic about the things is a good option rather than being pessimistic, I believe in. Individual purchasing power has also reduced due to the rate hike and inflation. That is also a reality. So overall, the situation is very dazzy and like wait and watch, as all negative factors are discounted, and market will react accordingly going ahead. In short term, we may find Nifty with base of 14,700. I again tell you that we are finding the Nifty base of 14,700 at the bottom side, and long run market looks bullish also, as increase in revenues of the corporates, increase in government income, increase in spending, increase in stability of the government, uh, base effect of the inflation, and the growth of economies in coming years. So we are very bullish in the coming years for the longer run rather than the shorter span of time, which is sluggish right now. Even we are at the P of below 20, and that is also an attractive P to invest in the market. So if you are a long-term investor, market is favorite for you to invest ahead for the longer term of time with the good return. Again, thanking you. I think I have provided certain market scenario with the datas, and had provided you the information that you were asking about the current scenario, and where actually we might head going ahead for the short and longer span of time. But I think if you are investing for a shorter span of time, this market is not for you right now. There will be an headwind for the both hand side, ups and downs will be there. Market will rebound again there will be a correction. So I don't think that for a short-term span of time you should invest. Yes, if you are going for the longer span of time, market is eventually very good and giving you an opportunity going ahead to invest. Again, thanking you for watching this video. If you find it knowledgeable, then please, we like to tell you that please like our video, share with your friends and whosoever who are actually investing in the market, and subscribe to our channel Billidawn Investopedia on the YouTube. Again, below we are giving the link for our Instagram page also, our Facebook page also, and we will provide our website also, and on that we are giving the contact details also, like email ID on that website, so you can directly contact us and ask your queries related to the investment side. We are also helping to make an investments accordingly with the current market scenario, and you can join us by just contacting us in the way that we have provided. You can also comment on the below video, and we'll get back to you also what to say. Thank you again, and just signing off for the day. Thanks a lot.